So in this video, we're going to talk a little bit about exit strategies and structuring a transaction for your creative finance property. If you like the video, guys, take a minute and like it. Don't forget to subscribe to our YouTube channel. And if you have questions, etc., please take a minute and comment below. Don't forget that we're going to have a drawing on these comments also from all of our various videos, and pick that one lucky person to have a 30-minute or so consultation with me revolving around your real estate question, your transaction, whatever it might be. And guys, on the screen, you're going to see the winner of last week's drawing out there. And remember, we're going to be drawing from the comments we get on all of our YouTube videos, and pick that lucky person to have that consultation time with me on the phone to go over your real estate deal. So let's just get right into exit strategies and structuring for a creative finance deal. Because one thing I see so much of the day is people they find someone who is willing to sell their home with creative finance, and they think it's an automatic deal. The mere fact that they're willing to say yes means it's a deal no matter how you put that deal together or how you structure it. And so many people out there in the industry, they all want to tack on a $10,000 assignment fee. I get it. But the question is you have to know what the back end exit strategy can be in order to structure the front end deal. The subject to part of a transaction is fixed. It can't change. So what can change in these transactions? Oh, well, if there's a realtor involved, realtor fees can be part of that change. Oftentimes, the deal has been sitting, the realtor knows there's a problem, but they still want a 3% commission. Maybe you should negotiate that down to 2 or 1.5 or 1%, something like that along the way. In addition to the realtor fee, the seller sometimes wants money. Sometimes it's cash, sometimes it's terms, sometimes it's both. And I get that everybody wants something for their home, I get it, but if the marketplace has changed, that has put them into a bind, maybe it simply is not available. You also have to learn to stop and know how to read a mortgage statement properly to see if they're current in payments. Are they behind in escrow for some reason? A lot of new builds I see get converted from land to real estate, and all of a sudden the homeowner might be 5, 8, 10, 12,000 now upside down in escrow that is killing them on monthly payments as well. So you've got to have the ability to talk about this, but what you also, and I see is so important, you know what is going on in the marketplace where this house is located. I see a lot of investors who are out of state, who are out buying houses in other states, and they simply take this house because they got it under contract and they go out and market and price it, not realizing that they have a lot of problems with this particular home in the area. What have been the days on the market so far in the house? What are average days for the market for the whole area? Is there other new construction ongoing that could diminish your marketability? Guys, keep in mind, home builders have huge giveaways, discounts, things of that nature that oftentimes the investor really can't compete with. And so if you've got a home that's only 2 years old versus a brand new house, what will a prospective home buyer want if they can actually qualify for a new loan? So really the only thing we have going for us in those type of dynamics is offering financing to a back-end home buyer. Also, so often I'll see the market data come across in emails, and it talks about the rental price and this and that, but the rental price won't even break you even on your monthly payment. So it makes it really difficult to buy that house as a rental investor, or if it will break you even on the payment, it won't break you even and give you any return at all on the money you're putting out of pocket. Many different strategies to look at this, I think. You know, sometimes you can find maybe an IRA investor to buy this sub-2 deal who is okay making a diminished return because it goes into their IRA tax-free. Could that be a positive scenario? Absolutely. But if you're marketing it to the open investor marketplace, I see that the investors are really analyzing these transactions. Been working on a deal recently where the homeowner appears to be upside down on their mortgage payment plus versus the current market value today. In addition, they have arrears in regard to their escrow that just popped up because of a new build type scenario. And if they sell the house today, they're going to be underwater and lose I think about 20 to 25, maybe even $30,000 after paying their commissions, after paying title fees, etc., which they can't afford to do. But investors want to sell this house where the realtors are getting 6% commission, all the fees are getting paid, the seller gets some money walking away, and they still want a $10,000 fee. Well, the problem is that if an investor buys that home, and if you want to offset your out-of-pocket expenses, and at least here in the Texas marketplace, we do wraparound mortgages, so the down payment helps to offset the amount of cash we're out of pocket to close this. And the problem becomes if your buyer sells the house, refinances the house in a short time frame, you may be caught upside down with your pants down at the wrong time and wind up actually losing money on that transaction. Any of these things can happen in the creative finance world out there. And so I think it's so important that when you're structuring the sale of the property, know how to structure that properly. But when you're looking at it to buy, you've got to really know what that back-end strategy is. You need to know what your days on the market are for your back-end buyer and for your neighborhood. What are the dynamics going on in the generalized area where you are? What's the condition of the home? Is it going to require repairs, not require repairs? And can you afford to buy this house, take it down, and hold it long enough to find a back-end buyer for the property? So it's so important to run the math, both front end and back end, know exactly what can happen to you along the way, know what those exit strategies are and how they're going to work for you in your transaction. So guys, I hope you found this helpful. If you did, take a minute and like the video. Don't forget to take a moment and subscribe to our YouTube channel. And don't forget to comment below, and we'll be having that drawing coming up where we're going to pick one lucky winner to have a consultation time with me on the phone to go over your real estate transaction.